Imagine if a thief could break into your safe without even stepping foot inside your home. In today's digital age, cyber criminals don't need to physically touch your assets to take control of them. Instead, they operate in the invisible world of cyberspace, targeting investors in the securities market with sophisticated tricks and tactics. Just as we are extra cautious with our wallets, we need to be vigilant online to protect our investments. With most investors now technologically savvy and preferring to trade through apps, websites, and mobile applications, the risk of cybercrime has increased significantly. In the securities market, cybercrime involves the illegal exploitation of digital systems to gain unauthorized access to investors' accounts, steal sensitive information, and even manipulate market data. Scamsters use various techniques to carry out these attacks, such as fake investment websites and trading apps that mimic real platforms but are actually traps set to steal your money directly. Social engineering tactics are also prevalent. This involves deceiving investors by posing as financial advisors or market experts, tricking them into disclosing sensitive details. They build trust through phone calls, emails, or social media, ultimately convincing victims to reveal sensitive information such as bank account details, trading credentials, or even OTPs. This tactic relies on psychological manipulation, making it particularly dangerous. For example, scammers may promise high returns on investments or claim to have insider information, pressuring investors to act quickly without verifying their credentials. Another common ploy involves sending fake messages about KYC updates, urging victims to share personal information to avoid account suspension. Similarly, scammers may claim that your bank or trading account has been frozen due to suspicious activity, prompting immediate action and the sharing of sensitive data to restore access. These scenarios are designed to create panic and compel swift action without verification, leading to significant financial losses. Then, one of the most common tactics is phishing, where fake emails and messages on WhatsApp, Telegram, and SMS impersonate trusted financial institutions to extract your personal information. Then there's malware, which can be installed through a suspicious link or download. This allows scammers to track your activities or even control your system remotely. Another method is hacking, where cybercriminals breach weak security points in trading platforms to access confidential data. Other forms of cyber attacks include ransomware, DDoS attacks, spoofing, layering, and identity theft, all of which pose significant risk to your financial security. Cybercrimes can have severe repercussions for you, such as monetary loss, a breach of privacy where your personal and financial information can be misused, emotional stress, and even legal troubles. While these crimes are on the rise, protecting yourself is possible with awareness and the right precautionary measures, such as engaging only with verified sources, such as the official websites or apps of stock exchanges and registered brokers. Check if these websites are secure and free from grammatical errors. Also, always verify the sender's details before sharing any personal information. Visiting the SEBI investor website and verifying the SEBI registration details of the intermediary, including the name, ID, and whitelisted apps. Using strong, unique passwords. A strong password typically consists of at least 12 characters combining uppercase and lowercase letters, numbers, and special symbols. Avoid using common passwords like 123456, password, or your name and birth date, as these are easily guessed by attackers. Always using two-factor authentication. It is an additional security measure that requires a second verification step, such as a one-time password sent to your registered mobile number or email, or biometric authentication like a fingerprint or facial recognition. Wherever the 2FA facility is available, make sure to enable it, as it significantly enhances account security by making it harder for hackers to gain unauthorized access. Never sharing your passwords or personal details via emails or messages, even if they look official. SEBI-registered financial advisors, intermediaries, and institutions will never pressure you for sensitive information over the phone or email. Following APK file guidelines and always using Google Play Store or Apple App Store to download any app. Installing reliable antivirus software and keeping your devices and apps updated. Also, avoid using public Wi-Fi for commercial or sensitive transactions and information. This helps protect you from viruses, malware, and other cyber threats. Remember to always stop and think twice. If you sense something is off, do not proceed with the transaction. Report it immediately to the relevant authorities like your broker, and also report cybercrime by calling helpline 1930 or visiting www.cybercrime.gov.in. You can even report spam communication on the Chakshu platform. In a world where cybercrime is evolving, stay alert, informed, and cautious. Your vigilance is your best defense in securing your digital assets in the securities market. You can also use the Spot a Scam tool on the SEBI Investor website to protect your treasure. Invest wisely and securely.
सोच कर समझ कर इन्वेस्ट कर